The latest big real estate market isn't on scenic coastlines or in major cities. It's in the metaverse, where a growing number of investment firms are spending millions to acquire digital property.
Owning land now in the metaverse is a little bit like buying land in New York 250 years ago.
Metaverse real estate isn't all that different from property in the real world. It just exists digitally in 3D cities where users can simulate real-life pursuits like shopping, playing games, or attending virtual concerts.
There are houses that you can walk into, there are shops that you can go into and buy things. And this real estate in the metaverse is increasingly for sale.
The idea behind investing in digital land is that once you own it, you can make money by developing virtual property and leasing it out.
We bought it because we want to do something very big there. We want to do something that's immersive and exciting, and in order to do that, you have to have lots of space.
Of course, digital real estate is still considered a very risky investment. So what exactly led to this virtual land boom? And what factors make it so valuable? Right now, the metaverse is an evolving space that comprises multiple digital worlds where users can interact with avatars. Many of these digital spaces appear cartoon-like, while others feel like virtual recreations of the real world. Andrew Kegel is the CEO and co-founder of Tokens.com, an investment firm specializing in cryptocurrency and metaverse real estate acquisitions.
Land in the metaverse looks a little bit like a monopoly board in that you have these parcels of land and you want to try to acquire as many parcels of land on the monopoly board.
There are only a few platforms where investors can buy and sell real estate, each with their own unique cryptocurrencies. Each platform has a limited number of parcels available for purchase, which is tracked using blockchain technology. In November, Republic Realm, a firm that buys and develops real estate in the metaverse, said it paid $4.3 million for land in the world of Sandbox. It's the largest digital property sale publicized to date.
The whole reason why it is a store of value is because at the outset, each metaverse platform declares exactly how many parcels there will be. So they would be cannibalizing the value of their own holdings if they continued to mint more and more of it. So that tenet of scarcity is what gives the category value.
As in the physical world, location is a major factor to consider when buying digital land.
Areas that are busier or have more visitor traffic, like the downtown areas, the parcels of land that are for sale there would be worth more than those that might be in the suburbs. Once you have this parcel of land, you can use various programming tools to create things like an amusement park, a casino, a museum. You can build whatever you want.
Investors are betting that individuals and companies will spend money on virtual developments like homes and retail space. And as more people join these online worlds, the properties will increase in value.
You know, if you build a mansion, you might sell it to someone who's very wealthy and wants to spend thousands of dollars or hundreds of thousands of dollars on a mansion in the metaverse. Or if you build a mall or an office tower, you're gonna lease out the space to companies and you're gonna collect rents.
Tokens.com said it paid $2.5 million for a tract of land in Decentraland's fashion district. Decentraland is a 3D, decentralized virtual world that was launched in 2017.
The long-term vision is that we want to turn that property that we've purchased there into the Rodeo Drive or the Fifth Avenue of the metaverse. Our goal is to be the dominant and leading metaverse landlord.
Companies pay an architect to design virtual homes or malls, and a game developer to build them. Zoning rules limit what and where a company can build in the metaverse. But unlike the real world, metaverse buildings can defy the laws of physics.
So there's a point in the development cycle where it looks nearly identical to real world real estate development. So you hire an architect, you come up with a mood board, you pull images of other spaces and buildings and designs you like, and you figure out what it is you're going to build. And then from that point forward, it actually turns into video game development. So then you hand it off to 3D renderers and then to 3D developers who make it interactive.
Some of Republic Realm's developments include a virtual mall, which it leases to retailers selling fashion for avatars, as well as a master-planned community of around 100 villas on private islands that it sold to individuals.
So in some ways, these immersive e-commerce environments that we're building are really 3D equivalents of marketplaces like Amazon, like Etsy, where multiple different sellers and retail products or experiences can be in one place, but not have to build all the tech themselves.
Advertising and brand partnerships are another enticing aspect of metaverse real estate. Investors anticipate a future in which digital property owners can work with brands that want a presence in these growing digital worlds.
Because this is not just an opportunity to continue to build their brand, but it's a way to introduce their brand to a whole new demographic of people that are young, gamers, into crypto, and all these types of things.
Of course, investing in digital properties is still very risky and highly speculative. Unlike in the real world, the value of virtual properties could plunge if the world they are in loses popularity and people stop visiting it. Prices can also be slammed by the volatility of cryptocurrencies.
It's really a third derivative investment of crypto, highly volatile, highly speculative, but the reason people are drawn to it is precisely for that reason, because there is the potential for outsized returns, and that volatility is what they came for.
In order to reduce that risk, investors are buying land in a number of different virtual worlds. Republic Realm, for example, says it owns more than 3,000 plots of digital land across 24 different worlds.
If you bought crypto 5 or 10 years ago, you're a very rich person now. And people see that and they're looking for other things like that to replicate that growth. And so all these other blockchain-based investments, including metaverse real estate, are appealing to people for that reason.
Interest in the metaverse and the properties within it accelerated as people spent more time online during the pandemic. It got an even bigger boost after Mark Zuckerberg announced Facebook's name change to Meta Platforms Incorporated, reflecting the company's focus on creating online worlds in the metaverse.
I think the light bulb just went off in a lot of people's minds that said, hey, this is something that's going to continue to appreciate quickly if the trend of people congregating in these environments continues to grow.
According to the digital currency investor Grayscale, the global market for goods and services in the metaverse will soon be worth $1 trillion.
So the next generation of tech users, which is why Mark Zuckerberg anticipated this and renamed his company, they're going to require from technology an experience that's 3D and immersive. And they are not going to be content with their parents' social media or e-commerce experiences, which are 2D and about scrolling. They're going to want to go meet their friends in what we now call a metaverse, where they can interact in a way that feels much more human and much more normal.